is up next on the cruise sector. Royal Caribbean Cruises, just noting total revenues. All right, good morning, trade pros. Welcome to our morning market update for this beautiful Wednesday, May the 13th. This is George Papsov, Trade Pro Academy. Hope you guys are having a phenomenal day. We're starting a little bit early today as an exception at 9 a.m. Jerome Powell is set to give a speech that's going to be very important for the stock market. It could cause a lot of volatility, and I wanted to be with our members and in our trading room live to catch the opportunity if there is one. All right, so he's going to be speaking in a webcast hosted by Peterson Institute for International Economics. Really curious to see what he's going to be wearing because he's going to be online, and I wonder if he stands up and is wearing boxers, Jerome Powell. There's got to be some bets that you could place online for that. All right, the reason this meeting is so important is that everyone right now is thinking about negative interest rates and how they're going to impact the market. All right, and our boy JP is going to talk about that. In the Federal Reserve, a lot of voting members have flip-flopped on this issue. They said we're never going to go negative rates, but then saying never say never, we might go into it, to it wouldn't be beneficial, to now it's like, okay, now there's more pressure on the Fed to go into negative rates. Will they do it or will they not? All right. If you look at who's gone negative, the ECB has, Japan, and the UK is considering going into negative territory, meaning cutting the rates below zero, and that's what constitutes negative interest rates. All right. The message has been mixed by the Fed, and so this speech is very important, and Jerome Powell could use this as an opportunity to clarify his stance. All right. Here's the thing about negative interest rates. Who do they benefit? All right. They benefit borrowers. Who do they hurt? They hurt the savers. And at the moment, what kind of economy is being driven and what's the engine of the economy? It's debt. All right. And so there are more net borrowers than there are savers. The biggest borrower of all being the governments. And so here's what a negative interest rate means. It means you're going to have to pay cash, to keep your money in the bank. So there's going to be a fee, not a bank fee, but an additional fee in order for you to just keep it on deposit. All right. If banks start passing that cost on to customers and make them pay for their cash deposits, it's going to incentivize them to do something with the money. All right. But the downside to that is it may just incentivize them to take it out of the bank. Okay. So cash in paper is going to be worth more than cash in the bank. Okay. It's going to devalue electronic savings. So here's the thing you need to know about that. You're probably not going to be able to get a negative interest rate mortgage. You're not going to be paid to borrow. In fact, what it could mean is if we go into negative rates, the banks will actually tighten their credit facilities. They won't give it out as easily. They'll increase the requirements. They'll actually increase the interest rate. This has already happened in Canada. When interest rates got lowered, banks didn't pass down that lower interest rate to customers because they deemed it more risky. They're like, look, there's people who could get loans and mortgages that shouldn't have them at this low rate in the long term. So we're going to tighten the purse strings and not give out the money. All right. And that actually has led to lower availability of credit. So it's a very interesting scenario. There's very mixed opinion about this. There is no right or wrong. But if you look at places that have negative interest rates, the impact has been it devalues the currency of those countries because your currency is not worth as much. So imagine you're in Japan and there's negative rates. Rather than paying to store your cash, you sell the yen, buy the US dollar, and now you're making money. And the US dollar has been bid up or bought because these other countries have gone into negative territory. Europe mainly. A lot of European dollars are sold and USD bought just to earn some kind of interest rate on a carry trade. Same with the yen. All right. And here's the yen's been a huge carry trade for decades, by the way. But here's the downside to that. A lot of money has flowed into the US dollar and the US economy because there's been negative interest rates abroad. What happens if the US goes negative as well? Right? It will have negative pressure on the US dollar. Currency traders, watch the dollar. It's going to be very important. Stock markets don't really know how to react to this because it hasn't really been considered before. It's a huge conference coming up in under 7 minutes, so we're going to watch it with our trading room, and we're going to potentially trade it. Today's opportunities may come before the opening bell, right? Especially the big ones. Overnight, we're seeing negative sentiment as Donald Trump also puts pressure on Jerome Powell. He said the U.S. should accept the gift of negative interest rates. All right. He said when you have negative rates, Jerome Powell now said when you have negative rates, you wind up creating downward pressure on bank profitability, which limits credit expansion. All right. That's what he said in November. Hang on. Well, the expectation is that such a policy might be announced in June FMC. Some suggest Here's a live squawk. Let's listen.
Accordingly, any commentary about timelines will be of use. The Fed chair is likely to reiterate that both fiscal and monetary authorities will need to do more to ensure that the recovery is robust. His remarks will be interesting, given the Democrats in the House unveiled stimulus version 4.0.
All right, they're just doing a preview. I thought they had released the speech notes already. All right, so that's going to be important. Powell had said it limits credit expansion and you create downward pressure on bank profitability with negative rates, which is true. All right. And so there's a mixed message there. Wait for 9 a.m. There's going to be some big, if there is a big announcement, if he mentions when they're going to go negative rates, if they're going to go negative rates, and at what policy meeting they'll discuss it, guarantees it's going to have a market reaction to the tune of probably 50, 60 points. All right. In other news, China and U.S. relations sour. The AFP reports that a group of Republican senators are putting together a bill called the COVID-19 Accountability Act, all right, which if passed will give Donald Trump 60 days to certify to Congress that China has provided a full audited accounting of their numbers to an independent body such as the UN. I don't really know how independent the UN is, but let's call it an independent body like the UN, all right, of what happened with the virus, what the real numbers are, agree to close their highest risk wet markets, which is the live markets where they, kill the chicken that you want on the market and give it to you, all right, and release all Hong Kong activists arrested recently. China is not going to agree to any of that. I virtually guarantee you. And so what's going to happen? Will the trade deal fall apart? Most certainly, yes. How will the market react to that? Does it matter anymore with the coronavirus? There's a lot of questions here that we need answered before we could start to really think about what the sentiment will be. But U.S.-China relations souring is an unknown. It's a big unknown in the eyes of everyone, including the stock market. Unknowns discount the price. Before we even know the answer, we know that uncertainty will drive price lower, which is why the sentiment crashed so much at 29.10 into the closing bell yesterday. Overnight, we're down to 25, right? 28.25, so almost 90 points, almost 100 points. So keep an eye out on that as well. Today's markets, sea of red across the board in all markets. And because we had a really big sell-off into the close, we're a little bit higher in U.S. equities. Okay, crude oil is for the most part flat. We just had an OPEC monthly report, which revised their growth forecast down by 2.23 million barrels of oil. They said storage could reach its maximum capacity in the first few weeks of the second quarter, which is, pretty much now. So we're watching for that. We have an oil report today at 10:30. The inventory, we're going to trade it in a room. Really looking forward to that, and we'll really save the analysis there in our trading room. Okay, we trade it every week. There's a lot of opportunity. Margins are reduced. We jump back into the oil trades again. Gold's flat. Bitcoin's down 2%. This morning we saw producer price index and MBA mortgage applications, and I didn't really include it in the notes, but mortgage applications are week over week up 0.3%. 30-year mortgage rate is 3.43%, slightly higher than the prior week. So you can see the 30 years getting skewed higher, a little bit further up, even though negative rates are becoming more likely. And as I mentioned, banks aren't going to be decreasing their mortgages into negative territory. Good luck getting a mortgage that pays you. Ain't going to happen. All right, banks will go bankrupt. So that's the mortgage applications. And this morning we also had PPI. 9 a.m. Jerome Powell, super important. 10 a.m. Atlanta Fed business inflation expectations. 10:30 the DOE report, oil inventory, and 1 p.m. result of a 22 billion 30-year note auction. That's it. Good luck. I want to open up the trading room and get set up for this trade. Love you guys. Be safe. Keep an eye out or a ear out for Powell. We're listening to it through a news squawk service. Whatever you have, it should work. Just be careful out there, right? There's no need to be a superhero, but there could be an opportunity to pick up some points before the open. I love you guys. Manage your risk, Trade Pro. Appreciate you all. And you guys have yourself a great day. BMAT, it really depends on where you're trading and what contract. I would assume you're probably trading the June, which expires next Tuesday. Flip over to the July, and you should have better requirements or better liquidity opportunities, lower margin. Okay, bye, guys. Take care. I got to go. I'm in a rush, as you can tell. Got to speak to the trading room before we trade this Powell thing. Take care. Love you. Have a great day. Manage your risk, TRADEPRO. Ciao. Geez, I can speak really fast. I just found out.